Hello, so a really quick run through. I don't do YouTube videos, so if I do say and a lot of breaks, then please just give me a little bit of a break on it because, like I say, I don't do videos. Just going to do a quick overview on my USDZAR. A lot of people have been asking for it. I've even had a couple of people subscribe to my channel now, just literally to see if I put my pictures up of my TradingView account in my discussion page. My TradingView account, I tried doing it, but obviously you have to have a number. I put my number in, and it says it's already linked to another account. Don't know what account that is, and to be honest with you, I can't be asked with the hassle of going through it. So I'd rather just do a 5 minute or 4 minute quick video, see how the response is to it. If people like it, want to see more of it, then please just put a comment or a like or whatever, and then I'll just go forward from there. And I'll continue making them. And I might even be asked to put the actual effort into getting my TradingView account up and running, so you can always see that. You don't have to listen to my annoying voice. But basically, the analysis on this one this is USDZAR. I just come out of the sell trade. I'm not going to get into the sell trade that I was already in. Like I said, that could be another video. I'm not putting an awful amount of effort into this because, one, I don't know who's going to watch it. Two, not really sure if anyone's going to really care too much. And three, it's really just sort of putting your foot in the water, just seeing how sort of things playing out. People who are interested, then brilliant. If people aren't, then obviously I just won't upload them anymore. But it's just really, I'm only putting this down to the majority of people asking me if I can show things. Can I do this? Can I give, sort of lessons on it? I'm nowhere near anywhere for someone to do lessons. I've made enough money to be very comfortable. But like I say, trading isn't the same for everyone, so do not take what I'm about to show you how I trade as as how you should trade. Because, for example, trend lines, head and shoulders, inverted head and shoulders, double bottoms, triple tops, them sort of things don't really work for me. I like to trade exotic currency pairs, and if anyone knows much about trading, exotic currency pairs do tend to go against the technical analysis, so I don't really like to stick to them patterns. It's just not my sort of thing. I've tried it before and I don't do very well. Some people try it and have an absolutely amazing experience in it, but this is just my 2 cents. So obviously here we have a breaking resistance. So the reason resistance was drawn at this point was because I use the RSI and 20 close. You can use anything else. I just like to capture the big movements, not the small little ones. That this would have been really even then the 14. A couple of others would have been in the 14. Up here would have been in the 14. I just get too many, and it sends out too many false signals for me. So I like to highlight my key areas in price movement through the RSI. So here you got it's oversold. So I looked at the oversold. I knew it was at the bottom. I've been tracing this since that trade. Like I say, that's a previous trade. I won't get into that right now. So you can see that it's come right down into that oversold margin. So what I tend to do, get the brush out for it. So obviously I saw this gone oversold. So at this immediate point, I will know that before this has gone oversold, that this is now a key significant point in price change. So I don't want to be in the oversold price range as the key point. Even though you could use the tip of it, I just really don't find it. I like to go to the previous line, the previous point of where price change was, which was actually here. So I drew my support line. Sort of like as a rough guide, kept my old one, it was up here somewhere, just where it was for the moment, because I wanted to see if this was really standing as it should. And obviously the price come down, it come up and it tested that line, it tested that support line, resistance line, sorry I don't know why I'm saying support, and then fell back off. See, and I left it then to see again if this was to go oversold. If it did, then I would do the same again and keep on going, and vice versa, because some of these breaks can go high and low and break between support and resistance, and they haven't actually had a significant change in price action. They can still continue the way they were going, regardless of the way that they've fallen. So as it come back down to here, I did start to see a massive amount of divergence, which is normally a key indicator. It's hidden divergence, not all the time, only sometimes, for price change. Obviously, I know now that this has been running out. Look at the steady amount that it's been falling down. We had a small retracement here that's been falling back down. And right now, recently, it seems to have a lot of momentum upwards and not really too much going down. And so this divergence was very key to me. Obviously, it was just after as well, like I say, the key price action point, which I normally rely off of. So as that landed, I drew this up, and then I had my key break. So it come up, it retested my line, run out of selling power right about here, a little bit of buy power to test it. The sellers tried to come back in, didn't go very far, and one big buy amount of purchase come through within an hour's period and broke my my resistance. To which then I actually got in. I think it was about here. I waited for that consolidation just to see how price was going to react. Is it going to drop back down or is it not? As soon as I saw this, I knew that the sellers had no real power within this. Buyers were still gaining majority of the power within that, so I bought in. I think it was on this third candle here. So I bought in there. See, and as I've written here, resistance, old resistance begins new support. So as you can see, I did the same as what I did. This is the key area, and this key area, this bottom, coming to where my entry was, which was only a little bit above my previous resistance, now support. So I just left it where it was. I didn't bother with that little bit of like amount because that's getting greedy with your money. So, and what I mean by that is I move my stop losses to the resistance or support that it's at. So getting greedy would be moving that. You're only going to save a couple of hundred or a couple of £1,000, so I'm not really too fussed. So I left it, and as you can see, price come up, and it hit retraced and touched. It come back up and come back down and retraced a couple of times and retested it and sort of broke for a little bit, but I was just going to wait to see. Like you say, nothing really majorly moves. I mean, even like this one, 1 hour and then it consolidates. You got big movements and they don't instantly within an hour fall all the way back down. You're not going to miss out on anything within an hour, so patience really does come in handy with trading. So obviously I just waited to see how it reacted. As soon as I saw that bullish that bullish pin come in, I sort of knew, okay, well, we're probably looking at this as just sort of an overstepped sell-off. It's going to come back up, to which it did, like I say, and I waited, and again, you can see here, we had a thing. So as I was saying before, you can use the very tips of them, okay? So again, we have got the tip of it, one here, and the tip of this one being here. So if we now draw two horizontal lines, one being here, and one being here, you will see that actually at this point price hit, it come down, it hit this line again, and it come down straight back to our old resistance, which is now support, and then it come back up, and then it come back down, and then it come back up and broke it. So I knew now that this is probably going to continuation of the trend, which as you can see, old resistance becomes new support. It tested it and then rebounced. See, now what I'm waiting for as a key indication is another sell-off. Don't worry, don't worry. Don't forget that my stop loss isn't up here and it isn't here. I've just drawn it for this example. My stop loss is still very much down here. Okay. I mean, you can even use this like up here to sort of gauge it where you want to be sat. Anyway, as you can see, price come down. It retested, and this is where I was sort of starting to think, okay, I might need to sell out of this. Let's see how it goes, because these are all just turbulence, right? They're not really pullback. So you got a pullback here to a bounce. This is now the top, and this is now become the bottom. It's still higher than the previous low, so you know the continuation is still potential. We waited again, it come back up and tested, and then broke through again. And then what we had here is the overbought. Sorry, I don't know why I'm getting these mixed up today. So what I like to do, like I said, I took from the last, which was here, and you could put it back to here just to say you're not going to be greedy. But you could also look along this line and see that here and here and here was all retest. So this could even be, you put it onto the lower side of here and put your stop loss along this side here. Okay. So then I waited again, and the market went up. And what did it do? It did the same. Okay, so it did the same and it retested, so I did the same as what I've just said. I don't ever count these ones because there's only one pin bounces. Okay, so I'd class that as the whole time it was over. I wouldn't class this as one individual because it's only a one pin bounce. If this comes back down and held for about 5, 6, 7 candles long and then went back up, then fair enough, I'll take the position. But same as this one here, it's only a one pin bounce. You'll ride on a lot of money on the potential on a very aggressive style. I don't really like to play aggressive. Sometimes I switch between. So anyway, we have come back down. This is our last stop. But as you can see, the last amount. So this is let's show you here without me trying to rush ahead too much. So again, you got the top, and then you've got my other one. So this is where I tend to take my key supports from, not the oversold, but just before that retracement, which actually works out to about here. Now, if I was to pull that back to the old support, actually comes in at this line. I don't want to be in here. Like I say, that little bit of difference is only a couple of hundred or a couple of £1,000. Okay, I'm not willing to risk money just to get that couple of £100 or a couple of £1,000 because I'm already up quite a distance. So I'm not really interested in that little amount. So again, I'd rather make sure I'm in the right trade and in the right money rather than just getting aggressive and then entering in the wrong trade, which again, as you can see here, I would have ended up doing. I would have gone into a sell, my stop loss would have been extremely high on the last highest high, and it would have probably come up and touched. So again, I kept it back down here, and the price come down and it bounced. See, and we've come back up. See, the reason this is called the maybe zone, okay, the reason this is called the maybe zone is because, as you can see, prices come in, and I do this quite often. This is another subject, and this is a bit more further into detail than what, you know, this video is sort of explaining. If people want to know more about my little maybe zone, then please just put a message, and well, I'll see if I can do something about it. But basically, the maybe zone is made up of two. So again, this was my support for this line, and this was again an oversold, bought area. I don't know why I keep on saying oversold. So what I did is I waited, and as I saw along that area, I saw that there was actually a point here and a point there where we had two bounces. We had one here, one there. We had a little bit of turbulence here. You can sort of take that as a bounce, and obviously and then price come along and price come along. So what I did is I thought, okay, well, we've had a couple of majority of bounces at this point. Okay, so that should have even been a bit longer. So I know now that this is probably a good support or resistance zone. But my main one with my stop losses is here. Right, so this is why I call it the maybe zone. It's because here could be a very aggressive approach. So as soon as this price come back down and touched, I could have flipped it. Okay, I could have flipped that over because, as you see here, there's a bit of an overbought. Now I only really like to focus on big moves like these. I don't really like these little ones, but sometimes you can get a good entry on the little movements with the equity that you have gained from the buy purchase in the original trade. So if you look at the previous, like I say, down here, the last low point in here, and like I said before, I'm not worried about these little movements here. They're pointless to me. I've already made a lot of money on this upcome. So I've dropped it down to that last known support, which is now here. So this is my aggressive line. This is my normal. This is my mandatory where I will be taking my money from. Where if it hits this line down at the 14708, that if it hits this line and breaks through the bottom and holds at the bottom, then I will be looking to close my account, close this lot, and then go into a sell position. The issue with going into that and using that sell position is your stop loss can be ridiculously high. I mean, you'll be going from, you know, 70, and then your last really known, you could put it back up here to 83. I mean, that's 50% of your position. So obviously here, that up to here, will be about 50% of your original position that you're using on this trade. And obviously up here, I think you're probably even looking at 200% of that original investment, which means if you're trading with 10% of your account, of your main capital, you'd actually only be able to put a 5% like overall lot size onto this trade, because you'll be risking so much. So because that risk is so high, I'm expecting this to probably come down to about this sort of area before making a bounce back up to that higher high. Because don't forget, we still have a lower on that turbulence. This is the last lower with a higher and a slightly higher, but the higher gap is a lot smaller than what that is. It shows that the buying power is actually running out. But like I say, if we did get into this trade, which is why I always take little trades when they do come in, if I did come into this one, from here to here will only be roughly around 100% to about 90% of the original equity amount that you're going into that lot size. So say you went in with, you know, a five lot size. So on a standard account, so you're trading with £5,000 on this trade. You'll be looking to lose £5,000 on that trade. Obviously, that'll only be 10% of your overall account, or 20%, depending on how aggressive you like to play. Obviously, down here, say that you were originally using that £5,000, you may only want to use a £2,500 lot, because overall from here to here you're going to be risking 5,000. I'm not saying to trade like that by any means, but that is all I am saying really about that. I'm not saying that I trade like that. I'm not saying that you should trade like that. I've just said what my outcome on this is I'm expecting it to probably come around here and bounce up. And if it doesn't, and it does continue to close through it, I will take my money and I will use a smaller lot. And the reason that I use a smaller lot is because I've actually just managed to take a position from this line all the way then to here. my original investment was up here, and obviously as soon as it got up to this point, it was around here, I was in the money regardless. But my original risk to reward was 3, which is your sort of standard within that. So I know that I've made that much money originally off that trade, but like I say, I'm half expecting this trade to come up, back up to these highs. It might even come up to the corner here. Like I say, you can't always trust these, but what you could potentially start to see here is using this support as a neckline. And like I said, sort of contradiction to what I said earlier about that I don't really like using these, because I don't, but it doesn't mean that they don't work. So what you could end up seeing is sort of something like that. You could end up seeing a head and shoulders pattern, with this being the neckline. So you could see it come sort of down, test this sort of area, but stay above it. Like I said earlier, that's what I'm predicting to happen, is it to come down to here and sort of stay there, and then come back up, and it could either become new highs or it could even hit here, in which case then when it starts to come down, I could even take a small position holding on to my original position, but using a smaller position just to sort of capitalize on that small retracement, if there is a retracement. If not, then my stop loss is only a little bit above where it originally is sat. But I hope that sort of gave you all sort of an insight into how I trade. But like I say, what works for one doesn't work for all. Take what I said in this with a pinch of salt. I've tried going over a lot of things that I don't necessarily even use, nor trade by. You can sort of, if you've got half a brain in your head, you sort of know how I'm trading, how you've listened. But then sometimes people sort of jump on the arse end of it, oh, you're teaching the wrong things, blah, blah. I'm not a teacher. It's just literally just due to demand. A lot of people have been asking for these, so I thought I'd just give it back. So that's all there is really. Leave a comment if you are interested. If you're not, then so be it. Cheers.